And we're back. It's been a while since I've uploaded a YouTube video here. For those of you who do not know me, I recommend watching my previous YouTube videos and or joining my free Discord. The link will be in the description. Other than that, we're going to get into today's video. It's going to be on our 4 key trading tips to simplify your trading. And yeah, with that being said, let's get right into the video. As I'm sure most of you can tell, I'm not in my regular trading office at this point in time. I'm just using the Airbnb to the best of my advantage right now. But getting into tip 1 right off the bat here, that's going to actually be having a solid trading plan. And believe it or not, most traders do not outline their trading plan in advance. It's kind of, they strike at when they see something and then they end up losing and they're like, ah, well, what the hell. For me, I tend to see all my trading opportunities maybe a week, a day, a couple hours before I even look to strike. I have a rule that if I don't actually see the setup beforehand of taking the setup or even price action coming into the levels that I was looking to take the setup at, I'm not taking that trade, because that for me would be a rush trade. And regardless, even if there's good opportunities that present themselves right away, like sometimes you'll see the market shows itself something, you can maybe strike on that, but in general you want to actually outline the plan or outline the trade, and actually see the trade before the trade even occurs. And then afterwards of doing that, you got to identify your risk tolerance, which for most traders that are just getting into the game, sure, you could do your 0.5% risk, your 1% risk, maybe 2% risk if you're pushing it, depending on if you're trading a live account or like a FTMO, which I'm funded with myself. But in terms of that, like, sure, start off doing your 1 to 2% risk, but once you actually have a solid trading plan and you have a routine that you know that works, you're actually able to risk a little bit more on a trade than per se you would be if you were just starting out. So for me, I don't trade like I don't scalp trade. I would say I day trade and I swing trade. And with that, I'm able to risk a little bit more on my trades, as I'm not taking 10 trades a day. I'm maybe taking 3 to 4 trades a week, if that. Sometimes I'll take 2 trades a month. It just depends what presents itself in that market at that time. But so me, for my risk tolerance, obviously, I'm looking at risk to reward ratios, which a big thing is a lot of traders want that 1 to 10, 1 to 7s, like those crazy risk to rewards. And I've found that aiming for that type of price, like profits and whatever, like having little to no negative to extreme positive, is just very stupid from a trader's perspective. So at the point in time, I've really found that looking for a 1 to 2, 1 to 3 setups are very keen. Like, you're willing to let that trade go into some drawdown to actually see that trade out. And if you guys are familiar with Alex FXG, like his set and forget strategy, setting and forgetting is probably the most efficient thing that you can do. If you can trade your plan, hold your trade regardless of the negative and the positive, you'll eventually take things 10 times further than the average trader. And then after developing your risk tolerance and seeing what you want to risk on that set trade, you're going to actually have to develop your strategy. So what conditions have to be met for me to actually take this trade. And for me, if you guys have watched my previous YouTube videos, you guys know the confluences I'm looking for. I really just trade technical, no fundamental really, other than looking at some news events. But for me, when I have a solid area of confluence, and what that would mean for me would be my horizontals, my fixed ranges, my Fibonacci's, market structure playing out. I use DXY as correlation as I trade USD pairs. That for me is my confluence, but you need to figure out what works best for you. And obviously playing around with different strategies and stuff like that can help, but dialing down on one, figuring out what's working, why it's not working, that will benefit you extremely in the long run. And then yeah, after that, you're just going to want to have a routine of checking your trades, checking markets on a day-to-day basis at a certain amount of time. So for me, every day at 8 p.m. or 7 p.m. EST, depending on where I am, I'll look at the markets, as I know the crypto markets open a new daily candle, and the regular trading market will be already open to that next day. And for me, then I can go in, update my levels, see what I'm looking for the previous morning, and then boom, Bob's your uncle. But yeah, other than that, it's fairly simple. You got to just stick with your trading plan, identify what you're looking for, and then just stay disciplined to it. Like, discipline is key. If you're not able to see your setup through, you're closing early, you're going into negatives, you're getting scared, you're closing out, and then the trade actually goes back into profit. Like, that's stuff that the beginner trader has to actually learn, and if you're not willing to be disciplined, you're not going to see the results in trading. Trading is not get rich tomorrow. It's taken me 4.5 years to get in the position I am today to even step in front of the camera and start to speak on behalf of my knowledge. But other than that, that's trading tip 1 is just starting with your solid trading plan and seeing it through. Alright, getting into tip 2 now, which is going to be using your higher time frames to identify your market structure, actually seeing what's going on with the market, and then breaking it into our lower time frame to actually take the trade. And I'll segue into the computer now. So we'll use for this example Bitcoin. Just I've recently taken a trade and I have a good synopsis on, or not synopsis, but I got a good way to review this for you guys and break it down and give you guys the right education, whatever. Enough of me. So looking at Bitcoin here on the daily time frame, obviously this is a higher time frame. You can see that I did identify to my Discord that we have 2 points on this chart to be weary of before we had actually swept the low here. So we had range high, which would have been around the 73,000 all-time high mark, and we had range low of this low, or of this range, sorry, sitting around 57,000. And with that, tip 3 is going to go a little bit more into this. I'm just trying to show you how I'm using higher time frames to give me perspective on what I'm looking for in the lower time frame. And tip 3 is going to be a little bit more on actually trading the range. But so at this point, if you're not familiar with a swing failure pattern, I recommend joining the Discord, asking some questions. I'm not going to go into this into depth this right here in this video. That will be a whole separate video. But so with range high being identified, range low on the higher time frames, obviously we know we're trading between that range. And there's 2 key things I'm looking for at these points, and that would be a swing failure pattern of either high or low. And at the point in time, we got the swing failure pattern of this low. And with that, we could identify on the higher time frame, low was swept, new low made. Now on the more local time frame, we'd be looking for an actual sign of strength to then take a buy position from that low. And obviously, being at a low, we're not looking to short lows and we're not looking to buy highs. We're trying to do the opposite. So coming into a more local time frame now, and this is where you're actually going to be able to set your entry, set your stop loss, identify your take profits, whatever that may be. So for me, obviously, our previous low was sitting around 56,500, and we had swept the low, reclaimed 56,500, but still at that point in time, we did not see that market structure change. So for me, I remained patient because obviously we could continue to trade with this trend, and coming in, getting rejected from that high, not taking this high, it's more than likely that we could have just continued down to find a new low. Then we would have been awaiting a awaiting new consolidation to take on a new entry. But at the point in time, we're still trading within now this local area of this range, which tip 3 is going into this a little bit more. But at the point in time, it was just on the 9th of July when we actually changed local market structure. So we came in, we found a low, found a higher low, then actually found a higher high, sorry, in this local trend, sweeping this previous liquidity here. So for me, that was my instinct to know, okay, now I'm actually looking for a retest to come into a level of confluence to then take into a buy. And at the point in time here, we did have a Fibonacci lining up with our daily level. It's moved now, obviously it's not valid, but I had then taken the entry there. I had a stop loss below this low due to the fact that this would have been local market structure change once again. If we would have taken that low, that would have been the invalidation for my trade, and we would have continued to look for lower, as that's changing the pattern from locally bullish to locally bearish from sweeping that low. And then as you can see here in the Discord, I did post this trade. It's just here for showing you guys that I'm not fucking around or whatever. But yeah, so you can see that's what we're kind of looking for in terms of higher time frames, the lower time frames. You're trying to identify the range, looking for that higher time frame confluence, then you're looking for the lower time frame actually consolidation to take on that trade. And yeah, that's pretty much tip 2. It's very, very simple in my eyes. If I didn't explain it the best, let me know. I'll do my best to reevaluate the situation here and make a new little video. But yeah, now we're gonna go into tip 3. All right, now we're getting into the 3rd tip out of the 4, and this one is actually going to be trading range highs and range lows. And as simple as this may sound, a lot of the traders tend to do the opposite. When they see breakouts in price at a high, they think it's extremely bullish and they're looking for buys, or vice versa. When it breaks down, we're at a new low, they're like, oh crap, like it's gonna dump. Like, no. You want to trade your highs, trade your lows, you short your highs and you long your lows. That is how you're going to make money within the market. And we'll segue here into Bitcoin once again. I'm going to show you 2 examples on this one. One being Bitcoin, as I just kind of went over in tip 2, and then I'll segue into S&P, which I'm currently in a trade right now. By the time this video's up, you guys can probably go back and see if this trade hit or not. Regardless of the fact of the outcome, set and forget. Trading a trade based off my confluences, so if it doesn't hit, doesn't hit. If it hits, it hits. I'm not really expecting much. But so once again, as I had mentioned in tip 2, we had range high identified at 74,000 and we had range low at 56,000. In terms of price coming up into range high, into the air, and it's not just like, you got to think of this as a zone. So for me right here, this whole zone from 71,000 to 74,000, that's range high. This whole low from say 60,000 to, I'm not gonna say 56,000 because I'll say that swept liquidity from that low. We'll say the 59,000 area is range low. And if we're coming into range high, you're not looking to take buys up there. That's a short area. And regardless if a short doesn't present itself and it goes for higher, you're still not looking to take the buy. I don't even, like, it just doesn't make sense. Maybe if you're taking trades on the 5-minute time frame and stuff like that, but for the strategy that I'm teaching you here, that's actually profitable, you're not looking to take buys from that scenario. That's a sell entry only, regardless if you get stopped out or however the trade may come. Even if you don't take a trade, sells. Vice versa when you come into lows. You're not looking to short the low. You're looking to get into a buy position to take it for higher, to then taking the short from the high. But that's a much larger range. Then if you come into more locally here, so looking at Bitcoin, which I previously just showed you a buy position that we took. But in the first case, like, see, with coming into this, so right here would be our range high, right here would be our range low. When price came into this level, sure, like, we didn't actually change the local market structure, so we're still trading with that bearish downtrend right now. You could look to short this down to if you wanted new lows to be put in. But for me, knowing the fact that we've already swept a main low and we're trading the range low, like of the bigger range, I'm not looking to take a sell from that position. I'd much rather wait for lower to just get into a bigger buy than try and catch a sell from here to take for a new low. That for me doesn't make sense. So you got to identify the market structure, see where you're at in the market to then trade that range accordingly. So for me, the only trades that I was looking for were to take buy positions from range lows. I wasn't looking to trade range high locally to take shells. So if we see here, this is what I had initially taken. I had more confluence than just this trend line. Don't go crazy on me here. But we're trading a higher high scenario here, and there's no reason for me to try and short this just due to the fact that we did change local market structure. We're at a new low, or a new local low. Like, obviously we're not at a new low, but that for me is kind of how I'm basing my trades off of and what I'm looking for to trading a range high and range low. Like, if we're trading all-time highs and we're putting in a consolidation, we've identified range high, we've identified range low, I'm not looking to buy range low necessarily to take to a new high. I'm looking for that short from range high to take to a new area of support to then get into a bigger buy scenario. That's how I look at the markets, regardless if a trade doesn't occur every day. That's just how I found profitability. Obviously everyone's going to have their own little setups and stuff like that, but for me, I found that that's what works. And now we'll go into S&P right now, and we can see. So we're in a very absurd bullish market right now, and I am looking for a short, which may not play, could or may not. For me, I know liquidity needs to be grabbed at some point for price to go higher, but locally I've identified a local bit of consolidation. So we came in, we swept this previous low, then we came in, actually took a new high. So it's market structures being very indecisive at this point in time. But when price is actually failing to break out after continuously sweeping highs, that to me is a bearish divergence, and I'm looking for a sell position. So we can see the low continuously getting higher and higher. So for me, this is what I looked at. I seen low swept, then I'd look for price to come into an area of resistance while still trading. It's consolidation above volume area highs or volume area lows is considered bearish, and you're not looking to buy consolidation above that level. As I said, we're looking to short highs, long lows. So for me, I'd be looking for maybe a long position from around these areas and sell positions from these areas. And as we can see, I'm in a nice 1 to 2 setup right now. We're getting rejected from our Fibonacci. If we can see acceptance back within this range here, I might even look to take a second entry, as now we're back inside range high, and I'll trade it to range low, which would be down here. And this setup obviously is not going to play out while I'm recording this video, but if you guys want to come back and see how this trade played out, be my guest. But yeah, that's pretty much it's it for tip 3. It's not, these tips are very basic, but they're very keen to know, to like, as a trader, like, you're not looking to short lows, you're not looking to buy highs, you're looking to sell highs and buy lows. Getting my tongue tied here. But yeah, that's gonna wrap things up for that. We're gonna go on to a tip 4. Getting into our final tip of the video, and this one is going to be on actually managing your emotions. And if you're new to trading, welcome to the dojo, my friend. This is an emotional ride. You have to be very strong to be a actually mentally stable trader, as you see money fluctuating on a day-to-day basis. You're continuously looking at the charts, you don't know what's going to happen, you don't know the outcome, so it builds a lot of stress. And if you have a lot of extra outside stress and noise, you got to try and cut that down. But in terms of managing your emotions, you need to remain calm no matter the outcome. And I don't care if you're winning. That means if you're winning, you gotta just act like it's another day in the books. You can't get excited when you see profits, because if you start to build your mindset on seeing blues, and then when you actually see reds and now you're like, what the fuck's going on? It's not what you want as a trader. You need to just remain calm. If like I referenced earlier in this vid, if you're familiar with Alex FXG, he's got this strategy called set and forget, which I don't trade his way personally, but I do use his set and forget strategy, as I'll set the trade, forget about it, no matter the outcome. I've done my due diligence, I've had my confluences align, so regardless of that outcome, and I'm risked efficiently. That is a big thing. Do not over risk, because then once you start over risking and losing, your emotions are going to take the biggest toll on you, and it is unbelievably not fun. Believe me, I went through 2.5 years of making no money to now actually being at the point where I can make money, speak about it, and go and help other people take the path that I didn't necessarily. And then with that, you want to also develop a routine to get rid of your stress or clear your mind up and just be mentally clear. For me, I go for morning runs. I work out every day. It doesn't look like it, but I'm trying. And yeah, for you it might be different. It might be just sitting down, practicing something else, meditating, whatever it is. Just build a routine that can distract you from the markets, regardless of it, spending time with family, anything it may be. Like, everyone's in a different position in life, so it's a little bit hard to have the same routine. But that's essentially it. Just manage your emotions. Emotions are one of the biggest impacts of a trader and your psychological outcome of things. Like, if your mindset and psychology is not set straight, you are going to be an unprofitable trader. That is the hardest thing to overcome as a trader. And with that being said, if you guys need help or you got any questions on what you can do to do anything, I'd say join my Discord. I'm always active in there. You can post, comment, whatever it may be. You can post your setups, post your fitness. We're not just focused on the markets. We're focused on building our bodies, building healthy relationships, networking, and so forth. But that's going to wrap up this YouTube video. If these 4 tips helped you in any sort of way, please share, even leave a comment letting me know which tip is you found the most adapting to you. And other than that, I got tons more YouTube videos coming. Probably won't be in the same setup, but yeah, enjoy your day. Thank you for tuning in. Join my Discord. Link will be in the description. It is free. If you want the VIP, there's actually no link to join. That is a private thing only. You have to show me that you're actually willing to put in the work. And for mentorship wise, I do mentorships, but only for students that are part of the VIP and show me that they're actually evolving and they're actually willing to put the time in to see the results. But yeah, that's gonna wrap things up, and I'm out.